Hey, so I just wanted to say that you should be investing in S&P 500 index funds. Uh, First of all, you should be investing for your retirement if you have excess money to, you don't want to put all your money in the bank because um, the bank doesn't really have an interest rate. Your money won't grow if it's in the bank. But I think more than investing in cryptocurrency or any meme stocks or anything like that, you should be investing in S&P 500 index funds. S&P 500 is the 500 biggest companies in the United States, the 500 most profitable companies in the United States. And when you invest in an index fund for the whole thing, you invest in a tiny piece of all 500 biggest companies. And those S&P 500 usually grows at 9% every year. Some years it grows at 40%, some years it grows 2%, some years it goes down, some years it goes up. Some years it goes up a lot, some years it goes up a little, some years it goes down a lot, some years it goes down a little. But usually the S&P 500 stocks go up 9% every year. You can invest in individual stocks if that's something you think you'd be good at, but most people would be better off investing in the S&P 500 index funds because stocks have a tendency to crash or crater or do really well, or you can get more higher returns if you invest in tech stocks or whatever, like, I don't know, Google or Meta or Amazon or Netflix or something like that, or Airbnb or Twitter or something like that. You can get higher returns if you invest in tech stocks, but if you invest in S&P 500 index funds, then you'll get a steady, reasonable return on your investment. It'll usually increase at about 9% every year. It is the most reliable form of investment that there is. I would advise people not to invest in meme stocks like GameStop or AMC. Just because something is trending on Reddit or whatever, people are talking about these things, doesn't mean, just because a stock is trendy doesn't mean it's actually a good investment. AMC, the movie theater industry has been decreasing every year for the past 70 years. And that's why you shouldn't invest in AMC stock. And you shouldn't invest in GameStop stock because the retail gaming industry has been decreasing every year for the past, 10, 15 years? It's been decreasing for the past 10 or 15 years because more and more people are downloading games through the internet or through their cell phone, or just downloading them onto their computer or their console. And they download the games instead of going to the store. And that's the problem with investing in companies like GameStop or AMC. Just because you like a company doesn't mean it's going to go up. And you don't want to be investing in cryptocurrency either. I know cryptocurrency is trendy, but cryptocurrency has a tendency to crash. NFTs have the tendency to crash, and they're not a reliable investment. You want to be invested in something that is steady and should go up more in the future. And it's not, and when a recession comes, you want your investments to do well. When a recession comes, you want to have reliable investments that are going to go up no matter what. Some companies pay dividends and some companies are growth stocks. The companies that pay dividends are called value stocks, and the companies that are expected to grow a lot are called growth stocks. S&P 500 is divided equally probably between value stocks and growth stocks. So your money is safe there. And it's smart investment moving forward. You want to be invested in something that's going to be there for a long time. A lot of times individual stocks don't last more than 50 years. A lot of times the companies from 50 years ago don't even exist today because we have brand new companies every 50 years. But the S&P 500 are different every year. When you invest in that index funds, the top 500 companies change every year, and it automatically changes the companies you're invested in. And also the margin rate is not as bad, as far as it's only a 0.05% fee to invest it in a good index fund. There's only a 0.05% fee to be invested in a fund like that. So you're not actually losing money just because some money market is controlling this fund. It's not actually more expensive than investing in a stock. You might think, mutual funds have a high fee as far as margin fee of to be invested in most mutual funds is like 2 or 3 or 4 or 5%. So most mutual funds have a fee to be vested in them. But the S&P 500 index fund, if you get it from Vanguard or you get it from a company that has a cheap fee, then it's not actually more expensive than investing in a stock. And it's a lot more reliable because it's something you can count on. It's something that's going to be there tomorrow and the day after tomorrow and the day after that. And it should increase at 9% a year. The fees should be extremely low. And it's a way to invest your money that's better than putting in a bank. It's better than putting in cryptocurrency, because cryptocurrency is probably going to crash. I mean, crypto could be a good investment moving forward, but I don't have evidence to think it would be. I don't actually understand the crypto market, and I wouldn't say it's something that is reliable or whatever. But I just want to tell you about the S&P 500 index funds and why you should be invested in that. Let me know in the comments below if you agree with me, you think it's a good investment, or you disagree with me. Please subscribe to this channel to be part of the community. And please like this video, it really helps the channel out a lot. Thank you for watching. Have a great day. Bye-bye.